In the next 10 minutes, I'm going to save you thousands on useless trading courses. Literally. This video is free, but it's worth more than any paid course you'll find out there, especially about fundamental analysis. I'm going to show you how one clean framework for fundamental analysis beats 95% of paid trading education out there. So, you've probably seen the average trading course. Break of market structure, bullish structure, we got a double bottom here, sweep of liquidity, break of structure. Now, you should long here, take profit right here, just follow the setup, repeat and repeat. It's amazing, except there's just one tiny problem. Sometimes this can work wonderfully, but the other time it gets absolutely run over. Why? Because there is no strategy that works independent of context. Listen me closely here. This is something that took me way too long to understand. There's literally no strategy that works independent of context. If someone tells you just trade this setup, in any market, in any condition, whatever and whatever, you should translate that into I'm just telling you hype for clicks and views, because that's what they're doing. Because price doesn't move because of one candlestick pattern. Price moves because money is forced to reposition. Interest rate changes, expectations shifts, risk get repriced. Participants, are wrong in position and they have to, adjust their positions. Now, indicators don't cause this. Fundamentals do. Now, let's keep this straight as possible. The biggest lie in trading education is that the chart is the source. Well, you're probably guessing that it isn't. The chart is the result. It's a very different thing. A pattern on the chart is the footprint. We all agree with that. I agree with that. The price action, technical structure, whatever, it's the footprint, but it's not the reason, okay? Let's try to make this as obvious as we can so you can understand what I mean. Now we are on EURUSD. A technical course teaches you, double bottom, bullish divergence on the RSI as well. What should you do? You should long here and target the highs. Looks great on a chart, it looks great on textbook, it looks great on theory. Instagram loves it, retail traders love it. Course sellers definitely love it because it's easy to understand and to sell. But now let's zoom out and understand the context. In this example, remember we're looking at euro against dollar. So this is EURUSD. The Federal Reserve is restrictive, so they're hawkish, meaning they're looking to maybe hike interest rates, maybe keep interest rates high. But the European Central Bank is dovish, meaning they are looking to maybe cut interest rates, maybe keep the interest rates low, maybe just they're not being hawkish as the Federal Reserve. Whatever it is, the yield differential favors the dollar. Okay, so we're looking at what's going on behind the chart. We're not just looking at the structure of the chart anymore. We're looking at what's going on behind the chart. And we understand that in this context, the Federal Reserve is supportive for the dollar. The European Central Bank is not so supportive for the euro. So, should you really buy the euro against the dollar just because the chart tells you so? Well, no. If you understand fundamentals, you look at this bullish setup and you say, that is just probably noise. And you simply step aside, okay? Now, don't get me wrong. From here, we were looking at the chart from here. The chart can still move a little bit higher, okay? It can still bounce 20, 30 pips, whatever, higher. It can still work, the trade, for a little bit, just, to take that screenshot, so you can screenshot and call it a win, whatever. But if you're a real trader, you simply don't care about those 20 pips. I mean, you can care about those 20 pips, but you're trading against the macro flow. That is an important point to understand. It doesn't give you the competitive edge that you want to be profitable long term. So you're removing a statistical advantage if you try to fight the macro trend. And that's the difference between amateurs and professionals. The amateur sees a pattern and feels compelled to act, but the professional sees the pattern and asks, is this aligned with the macro context? Is this aligned with what's going on behind the chart? If the answer is no, he simply steps aside and he saves himself probably a stop loss, okay? Fundamentals are not here to predict every single movement on the chart, every 10 pips, every 5 pips, whatever. Fundamentals are here to frame the trend probability, to understand overall where things are likely going to move. Let me simplify this into an actual workflow. Okay, so the retail process is, as you probably know, open up a chart, find a pattern, feel that fear of missing out, which is a big one, enter a trade and get stopped out. Okay, now the professional process is a lot different. It's identify the macro story, understand the relative central bank picture, track what's validating the setup and what could invalidate the setup. So this is scenario A, and then this is scenario B, and then use technicals to find the entry. See the difference? Here we got technicals at the base, and here we got technicals at the tip. It's the final step pretty much to confirm what the macro story, the macro view, the macro bias. Now, this is the framework. And the point here is that technical strategies are conditional. Context decides whether the strategy even deserves your attention. Okay? If you see a setup, you gotta understand in which context is the setup performing. Let me explain in more detail. Now, a bullish engulfing candle means nothing by itself. Now, it means something, it means a little bit. It shows the dynamic that is happening, between buyers and sellers, but it doesn't tell you what really created that pattern. It doesn't tell you the sentiment. It doesn't tell you the catalyst that created that pattern. But a bearish engulfing inside the macro environment may be aligned with the central bank repricing, may be aligned, with the geopolitical escalation, whatever. Now we're talking, it's the same chart, it's the same engulfing candle, but it's put in a different step in the framework. Okay, that's the difference. The amateur sees a pattern, takes action regardless. The professional sees the pattern in context with the macro story, in context with the macro context. So, all this said, here's how you can apply this immediately. Now, you don't need to overcomplicate this. You don't need 6 screens and a Bloomberg terminal. Just start asking, what is going on behind the chart? What is the story moving price right now? Is it maybe geopolitical tensions? Is it maybe a recession? Is it maybe central banks? What's moving price fundamentally? What are people talking about? That's the narrative. Okay, narratives move expectations, and expectations move the market. So the question is, what's the story right now? Now, to give you a practical example, at the time of recording this video, the story is the geopolitical tensions in the Middle East. And it's all about pretty much oil prices. Geopolitical escalations lead to higher oil leads to a stronger dollar. And the opposite is true, okay? If the energy disruption fades, the dollar also fades. Now, the story is this. It's about what's happening in the Middle East. So if it's going to escalate further, de-escalate. That decides where oil goes, and so that decides where the dollar goes. So once you start asking, what is the story here? What is the sentiment? What is the narrative? What is the catalyst? The chart begin to get a different meaning, okay? Because you're not just looking at the movement on a chart, you're looking at the movement in context. That is a very important point. Now, I know this is where a lot of traders freeze because they just don't know how to find a narrative behind the chart. They've never been taught how to find and feel the sentiment behind the chart. So this is actually a lot of what we do in the private network. We tell you exactly what matters at any given moment in time, so you always know what's going on. In this case, about the oil prices and the geopolitical tensions in the Middle East. But hey, AI can also be a lot useful in this. Just ask ChatGPT, what is the dominant macro story happening in markets right now? Geopolitics, central banks, interest rates, what is it? And it should come up with the most predominant macro narrative going on at that moment in time. Now, you still have to understand this, obviously, and that's the gap that the private network bridges as we explain in very simple terms, how you should read the market fundamentally. But that said, that context in mind, you start building scenarios. If A happens, then the markets will trend like this. So if the energy disruption gets worse, then the dollar stays bullish and equities continue falling. Or scenario B, if the energy disruption fades, so if energy prices essentially move lower, then the opposite obviously happens. Now, once you have that view, the technicals on the chart start to make a lot of sense because they help you execute with the story. and they help you understand also the story. If the macro framework says that oil prices are likely to stay elevated, so you analyze the geopolitical situation and you think you understand that there's not going to be any meaningful de-escalation too soon, then you understand that energy prices are most likely going to stay high. So what's it going to do? It's going to keep the dollar strong. So in that case, what should you do? You look for timing and structure to engage in that direction. That's then when technical analysis becomes useful. It helps you time the trade. It gives you structure in which to, trigger and, set up the risk reward for the trade and so on and so forth. But it only becomes powerful when it's aligned with the macro context, the macro backdrop. So the order here matters. This is key. Now, first, understand the story, understand the macro scenario, understand the narrative behind the chart, and if it's going to move this way, then markets are going to move this way, so scenario A, scenario B, and so on and so forth. That's what professionals do. They understand the story behind the chart, and then use the technicals to refine the execution, okay? It's a completely different process from most 99% of what you've been taught out there. And honestly, this is what more than any paid course you'll find out there, because most trading education is obsessed with setups. This setup, that setup, this pattern, this entry model. But a setup without context is just, in my opinion, in my experience, it's just a shape. Now, is it useful? Yes. But is it a competitive edge to be profitable long term? No. That's all. That's all really. Shapes by itself don't move the market. Narratives do. Expectations do. Policy divergences do. So if you take one simple core pillar understanding from this video, make it this. Before you take any trade, don't start from the reverse. Don't start from here. Now you can, if you want, start from the chart. I actually made a video on this, that you can start from the chart and work your way backwards to understanding the fundamentals, but just don't completely ignore the fundamentals. Don't start from the chart and just understand the pattern and then FOMO into the pattern and then you get stopped out. Put the fundamentals in here somewhere, get the chart, understand what's going on, then take a trade. But the point essentially is that before you take any trade, I would like you to ask yourself what is going on behind the chart. You'll see a massive difference in your trading if you start doing that. Understand what story is moving the price right now. What supports that story? What would break that story? So create a scenario A, create a scenario B, understand what's going on and understand how that story should and could move and evaluate that, okay? So if I can simplify this even further, it would be this. It's understand what narrative is currently moving price. Okay, something started a trend, something started a move. It's a narrative, it's a story, it's a catalyst. At any point in time, ask yourself if that fundamental story, sentiment, whatever, that is currently driving the trend and the move is likely to continue or not. In the case of geopolitical tensions, just ask yourself, is the geopolitical tensions likely to continue or not? And so on and so forth. If you can answer that question, which by the way, it's slightly easier than you may think. If it's, for instance, about interest rates and monetary policy, just understand what central banks are signaling. If interest rates will move higher or lower. I've got loads of videos in how to understand central banks' language. So how to understand their forward guidance. But if it's, for instance, about geopolitics, it's about seeing essentially what's going on in the world and understanding if things are likely to escalate or de-escalate. That's essentially the analysis part in fundamental analysis. Understanding the world and the macro events in the world, okay? And that is a completely different level of trading. Now, if this video gave you a useful perspective into fundamental analysis, do me a favor and hit the like button and subscribe if you want more content that actually helps you think through the market.